Welcome back to Tesla Daily News Podcast. Today is Saturday, January 24th, 2026. In the next few minutes, we're breaking down the biggest Tesla developments that could move the stock, a major Robotaxi milestone in Austin, fresh signals on full self-driving approvals in Europe and China, a possible shift in Tesla's software pricing strategy, a massive Megapack energy storage project coming online, and new demand and competition clues coming out of Europe and Southeast Asia. First up, Tesla says it's now running Robotaxi trips in Austin without a safety driver in the vehicle. Here's the hook. Tesla just took a step that markets have been waiting years to see: driverless rides, at least in a limited form, in a real city. The context is simple. Tesla's valuation has increasingly leaned on autonomy. If Tesla can convert full self-driving from a driver-assist product into a true mobility network, it changes the revenue model from one-time car sales to recurring, high-margin service revenue. The details. Multiple outlets reported Elon Musk saying Tesla began Robotaxi drives in Austin with no safety monitor inside the car. Financial headlines noted the stock popped roughly 4% on the announcement. However, there's important nuance. At least one report claims Tesla may have moved human oversight to a trailing vehicle rather than removing supervision entirely. Impact for investors. Even with caveats, this is a meaningful de-risking data point. The bull case is that Tesla is incrementally proving it can run a commercial-style service and that it can scale quickly across the US. The bear case is that no one in the car is not the same as no supervision, and any incident or regulatory backlash could hit sentiment hard. Takeaway. Watch for two things: how many vehicles are actually operating in this mode, and whether Tesla or regulators clarify the operational design domain. In other words, where, when, and under what conditions these rides work. Second story. Musk says Europe and China could approve Tesla's driver-supervised full self-driving as early as next month. Hook. Approvals in Europe and China would instantly expand Tesla's addressable market for software revenue. Context. Tesla's FSD take rate and monetization matter because software is where margin expansion could come from, especially in a period of more competitive EV pricing and uneven demand. Details. Reuters cited coverage reports Musk expecting regulatory approval for driver-supervised FSD in Europe and China possibly as early as next month. Europe has traditionally been slower due to stricter safety rules and fragmented regulation, and China is critical because it's both Tesla's largest production hub outside the US and the world's most intense EV battlefield. Impact. If approvals come through, the immediate upside is higher software attachment and potentially better gross margin mix, even if vehicle pricing stays competitive. The downside risk is that regulatory approvals may come with restrictions that limit capabilities, or timelines could slip, which would pressure the autonomy narrative. Takeaway. Investors should treat next month as a catalyst window, but not a guarantee. The real stock-moving detail will be the fine print, what features are approved, and whether Tesla can update frequently without recertifying every change. Third story. Tesla may be changing how it packages and prices driver assistance, raising the FSD subscription price and phasing out the autopilot brand. Hook. This is Tesla trying to turn autonomy into a clearer, more profitable product ladder. Context. Tesla has long used software to lift margins, but the company also has to balance price increases with customer adoption. Higher pricing only helps if customers keep buying. Details. Musk said the full self-driving subscription price, currently around $99 per month, will rise as capabilities improve. Reports also indicate Tesla is moving away from the autopilot naming, with basic driver assist functions described differently. Impact. For the stock, this cuts both ways. Higher subscription pricing supports average revenue per user and a software-like multiple, especially if regulators open new regions. But if pricing rises faster than perceived capability, adoption could stall, and that would weaken the narrative that Tesla has a scalable, high-margin autonomy business. Takeaway. Watch for Tesla to report either higher FSD take rate or higher FSD revenue per vehicle delivered. In a market that scrutinizes margins, software mix will matter. Fourth story. A giant Tesla Megapack energy storage project reportedly just went live in Arizona. Hook. Tesla Energy keeps quietly posting the kind of project scale that can meaningfully move the company's growth profile. Context. Energy storage has been one of Tesla's most promising margin and growth segments, especially as utilities need grid stabilization and renewable integration. Details. A report says a large energy storage system in Maricopa County, Arizona, using Tesla Megapack was commissioned with a stated cost of about $560 million and includes 594 battery modules. Impact. For investors, big deployments signal strong demand and backlog conversion. Energy storage can also smooth cyclicality in vehicle demand. The key is execution. These projects are capital intensive, and investors want to see sustained gross margin improvement and scaling. Takeaway: keep an eye on Tesla's next earnings commentary for energy storage deployments, backlog, and margin. If energy continues scaling, it supports the thesis that Tesla is more than an automaker. Fifth story: Europe's EV crown is shifting. Tesla lost the #1 spot in European EV sales for 2025 to Volkswagen, according to reporting. Hook: Tesla is still a leader, but Europe is getting more competitive, and that matters for volume and pricing. Context: Europe has been a key battleground for the Model 3 and Model Y, and Gigafactory Berlin is strategically important for supply, lead times, and tariffs. Details: European reporting says Volkswagen overtook Tesla in EV sales in Europe in 2025. Separate coverage notes Tesla reduced headcount at its Grünheide, Germany site by about 13.8%, while describing the outlook as stable. Impact: losing share doesn't automatically mean collapsing demand, but it can pressure pricing power and margins. If competitors are winning through broader model lineups or incentives, Tesla may have to respond with pricing, feature improvements, or refreshed products, each with margin implications. Takeaway: watch European registration trends, Tesla's pricing moves, and Berlin utilization. A stable factory with weaker demand can become a margin headwind. Sixth story: Tesla is widening its lineup in Malaysia with more accessible pricing and new variants. Hook: Tesla is still pushing geographic expansion and price segmentation, two levers for unit growth. Context: as mature markets get more competitive, incremental growth often comes from new regions and broader price points. Details: reports show a Model 3 standard rear-wheel drive listed in Malaysia at around 147,600 ringgit, positioned as the cheapest new Tesla there. Tesla also introduced a Model Y long-range rear-wheel drive variant in Malaysia, with a stated WLTP range of up to 661 kilometers, priced from about 216,450 ringgit. Impact: lower entry pricing can lift volume, but investors will ask the obvious question: what does it do to automotive gross margin? If Tesla is using a cheaper trim and regional expansion to keep deliveries growing, it may be trading margin for scale. Takeaway: watch whether Tesla's regional expansion comes with strong financing, incentives, or inventory dynamics, and whether it supports deliveries without pushing margins down. Quick recap before you go. The big theme today is Tesla doubling down on the autonomy story, Robotaxi progress in Austin, and the prospect of near-term FSD approvals in Europe and China. While the business reality remains a balance between growth and competition, especially in Europe. Meanwhile, Tesla Energy keeps adding real, utility-scale Megapack wins that can strengthen the long-term fundamentals. What to watch tomorrow? Any clarifications on the Austin Robotaxi setup, especially whether supervision is truly removed or simply relocated, and any concrete regulatory signals from Europe or China on FSD timelines. Thanks for listening to Tesla Daily News Podcast. If you want this breakdown every day, subscribe and follow us wherever you get your podcasts for tomorrow's update.